Should you switch to an S Corp in 2025? Now, if you're a small business owner, you've probably heard about S Corps, but is it the right move for you, and should you make the switch this year? Well, today I'm going to break down the most important things for you to know about the S Corp election so that you can make the best decision for you. So first things first, what is an S Corp? Well, an S Corp is the short name for an S corporation. It is a subchapter of the IRS, and that's why it is called a subchapter S Corp. Now, notice I said it's a subchapter of the IRS code. It is not a legal entity. So that's something that gets confusing and a lot of people still don't really understand. But legally, if you are a subchapter S corporation, you might legally be an LLC, or you might legally be maybe a C corporation. So you want to know what your legal entity type is, which governs all of your legal formalities. But the S corporation is an election that you can make that specifically applies to IRS taxes. So what I typically tell people is if you're describing your entity, you want to think about what's my legal entity and what's my tax entity. So for example, you might say I'm an LLC that is taxed as an S Corp. Or maybe you'd say, I'm an LLC that is taxed as a sole proprietor. Okay, sole proprietorship is just a pass-through entity that files a Schedule C. So that's typically what you will default to if you create an LLC. You're still taxed the same as you were when you were a sole proprietor, unless you make this tax election to become an S corporation. Now, for the rest of this video, I'm not going to talk about C Corps because most of you here are probably sole proprietors or LLCs that are considering becoming an S corporation for tax purposes. And if you're a C Corp, there's a different set of comparisons you need to make. So I'm not going to talk about that here. We're just going to talk about the difference between a sole proprietor or LLC and making that S Corp tax election. So why would a company make an election to be taxed as an S corporation? Well, because it could save them money. So as a business owner, I am a really big proponent of making sure that you are the right legal entity that is going to reduce your tax burden the most. I'm not sure about you, but I don't love paying more taxes than I really need to. So S corporations grew in popularity really quickly, in part because of tax advisors who grabbed a hold of this and told everybody in the entire world that they needed to be an S corporation. Now, you may have seen this if you're on TikTok or Instagram or Facebook, where when you ask a question perhaps about how you can save money on taxes, it never fails that the first answers are always become an S Corp. You can save all of this money. And while that may be true, it isn't right for everyone. So in order to make the decision on who it might make sense for, I want to explain exactly how an S corporation can potentially save you money. But before we go down the road of talking about how you're taxed as an S Corp, let's first understand how you are taxed as a sole proprietor. And remember, even if you formed an LLC, if you have not elected S Corp tax treatment, you are taxed still as a sole proprietor, and you will file a Schedule C form within your tax return, and it's just part of your individual tax return, and that's going to basically be reporting your income and your expenses as a business owner. When you fill out this Schedule C, which is on the screen right now, you're going to put in all the income you made in your business, you're going to put in all the expenses you had, it's going to come out to a net profit. And that net profit is what is going to be taxed. So essentially, they're going to take that net profit and add it to any other sources of income you might have. If you or your spouse that you're filing jointly with have a W-2 job, it's going to add that together, or any other taxable income you might have to come up with your total taxable income. Now, that full taxable income will be subject to income taxes. There's just no way around it. It is technically income, and therefore you're going to have to pay income taxes on it. And income taxes are when we get into talking about the tax brackets, right? Where the first X amount is taxed at a certain rate, and then it goes up from there. But that is not the only tax that we have to pay, especially as business owners. So the other type of tax you're going to have to pay on any earned income is payroll taxes, or this might also be called self-employment taxes. Ultimately, we're talking about Social Security and Medicare. So these are those taxes that get taken out of your paycheck. If you're an employee for someone, you will pay half and your employer will pay half. However, when you are a small business owner and you are taxed as a sole proprietor, right, you then are going to have to pay both sides of that tax. So that's 15.3% in self-employment taxes that you are paying in addition to income taxes. And again, that's what you're going to pay on all of your earned income, which the entire net profit in your business is considered to be earned income when you are taxed as a sole proprietor. So hopefully that makes some sense as to how you are currently taxed if you have not yet elected S Corp tax treatment. Now, when you do elect S Corp tax treatment, how does that change things? Well, it doesn't change anything from an income tax perspective. You are still going to have to pay income tax on all of your income. However, where you could potentially find some savings is the fact that with an S corporation, you can essentially divide your earnings into two buckets. One of them is the earned income, which is going to have income taxes and also those payroll taxes assessed on it. And one of them is more your unearned income, the income for being an owner in your business, but not an employee of your business. And those earnings are just subject to income taxes, but not any kind of self-employment or payroll taxes. Now, you might say, well, why can't I just put all of my income into that second bucket? That second bucket sounds way better than the first one. I'd rather pay less in taxes. And that's where some of the rules come into play. And this is where it can get a little tricky. Ultimately, there's a requirement to pay yourself a reasonable salary. That's going to be your earned income in that first bucket that's going to have all the taxes on it. And then anything above and beyond that reasonable salary that you pay yourself, that can then be taxed at a lower rate. Now, as you would expect, the IRS is going to have some thoughts. If you're ever audited, they're going to want to see proof of that reasonable salary. If you're curious to see more about reasonable salary and how exactly to come up with that, I have a couple other videos on this topic that you definitely want to make sure to check out. And you can see that the level you set your reasonable salary at is really going to determine how much tax savings you're really going to be able to have. So if you're not making very much in your business, let's say your business is only profiting about $20,000, it's going to be hard to say that maybe your reasonable salary should be less than $20,000, right? More than likely, if you're working full-time in your business, if you were to go hire someone to do that same job, you might have to pay, let's say $40,000, $50,000, $100,000. I don't know, depends on what you do in your business. However, more than likely, it's more than just $20,000 if you're working a 40-hour-a-week job. So that means if you're profiting only $20,000 in your business, it probably doesn't make sense to become an S corporation. You're not going to have any earnings above and beyond that reasonable salary that would get that preferential tax treatment. So oftentimes, the more you make, the more you can save with an S corporation, although it really depends. And that's especially true now because there were some new things passed back in 2018 with the Tax Cuts and Jobs Act that made the calculation of S Corp versus LLC a little more difficult. So suffice it to say that calculation is really individualized, and you're going to want to either do that calculation yourself with some resources or have an accountant do it for you. Now, if you're interested in understanding this more yourself, whether you're planning to hire an accountant eventually to do it or you just want to DIY it, definitely check out my masterclass that is coming up. It's called the S Corp Switch Masterclass. Is it the right move for your business this year? And that is coming up shortly. So definitely check out jamietrull.com/switch. And if you missed it and you're watching this later, still go to that page and see if there are any new options for times coming up that you can catch the masterclass. So in that masterclass, we're going to be able to go a lot deeper than we can here today and really give you the information you need to try to make the decision for what you want to do in 2025 and beyond. So let's talk really quickly about the pros and cons of electing S Corp tax treatment. And the first pro, as you may have already gathered, and the primary reason most businesses would make the switch is because of potential savings on self-employment taxes. Again, this is Social Security and Medicare. The other thing that can be helpful about being an S corporation is it could give you more credibility when it comes to lenders. Essentially, you end up being an employee of your own business, you give yourself a W-2, and it can be better proof for lenders for mortgages, or if you want to get business loans, there's just more credibility. Additionally, it might be easier when it comes time to sell your business. So that's just something to think about. There's also a lower audit risk on S corporations versus sole proprietors. But what are the cons of of being an S Corp. That's something to know about too. We don't talk a lot about this, but honestly, there's more paperwork, there are more requirements, there's more corporate formalities that you have to do, right? You're going to have a separate tax return. That's probably going to cost you additional money to have someone file that corporate tax return for you. And you're going to have to run payroll and put yourself on payroll. And if you don't have any employees currently on payroll, that could be a fairly decent additional cost. So you want to weigh those costs of compliance against the tax savings that you may get. And again, another con potentially is the reasonable salary requirement. You do need to figure out what your reasonable salary is. There's often some cost to determining what that is and making sure that you can support that reasonable salary. Again, go check out my other videos on reasonable compensation and some of the other tools that I have to help you with that. But ultimately, there's just a bit more work involved. So should you switch to an S Corp in 2025 or 2026, whenever you're watching this? It depends. Now, it's important to know that while you can technically elect anytime during the year, it's going to be easiest if you elect by the deadline of March 15th, and then you can backdate it to the beginning of the year. So that's going to be the easiest time to make this decision is before March 15th, and then to file your Form 2553, which is that election form. Now, if this is something you're seriously considering, again, I highly recommend going to my masterclass where I can dive deeper into this and give you some really specific examples and tools that you can use to help you make the best decision for you. Again, that's jamietrull.com/switch. But in short, if you're informed, I think making an S Corp election can be a great thing for your business. My general business is an S corporation, and it does save me money each and every year. But that's not without a lack of effort, so you just want to make sure that you're informed and that you understand the risks and the requirements involved. And the main thing that I'll say is this is definitely not something you want to go into with your eyes shut. Even if you have an accountant who is filing for this for you, there are ongoing requirements that you as the business owner need to know and understand. And there are little things that being an S Corp can impact that you might not even realize. Things like retirement contribution limits, things like how you reimburse yourself for the various different business expenses you might be incurring, things like hiring your kids. So there's a lot of other impacts of being an S corporation that may not otherwise be talked about very much. And so that's something you want to make sure that you are fully informed about. If you found this video helpful, please make sure to like and subscribe, and definitely go sign up for that masterclass. The link is on the screen right now. It's completely free, and I'm excited to see you there.